let's straight away go across to Shereen, who is with Minister of State for Finance Jayant Sinha to talk about the National Investment and Infrastructure Fund. Shereen, over to you.
Well, the India Investment Summit is all set to kick off tomorrow. The government is hoping to get sovereign funds, pension funds on board to partner with the government for the National Investment and Infrastructure Fund, or the NIIF, to try and deal with the infrastructure woes facing the country. Joining us now is the Minister of State for Finance, Jayant Sinha. Mr. Sinha, I appreciate you joining us on CNBC TV 18. Before I talk to you about the India Investment Summit that kicks off tomorrow, a quick comment as far as the OROP payment is concerned. We understand now that the government has finally cleared the one rank, one pension payment. What is this going to mean as far as the fiscal deficit is concerned and the fiscal consolidation roadmap? Because there are concerns on the implications of the 7th Pay Commission, the OROP on the fisc.
Well, the OROP was a promise that we had made, Shereen, and it's a promise that we have fully delivered on. Obviously, there were a lot of nuances and issues that we had to work through, and we've gone through a series of consultations with our ex-servicemen, respecting, of course, their great service to the nation and everything that we've done. So we wanted to ensure that they got a fair and balanced package, and I think that's the package that's been delivered right now. Now, with respect to the fiscal consolidation roadmap, we have said all along, Honorable Finance Minister has said this, that both the 7th Pay Commission as well as one rank, one pension was fully factored into our thinking when we in fact laid out the roadmap of 3.9% fiscal deficit this year, and then 3.5% fiscal deficit thereafter, and then 3% the following year. So all of that was factored in.
So no slippage expected, especially over next year.
Now you're asking me about the budget.
Okay, we're in the budget quarantine, so I'll stay away from that. But let me ask you about the India Investment Summit tomorrow. What do you really hope to achieve at the end of all of this? And what does it mean now as far as operationalizing the NIIF is concerned? Because we know that you have been talking to, or at least been speaking of interest from sovereign wealth funds, from pension funds. But what is it finally going to boil down to? How many MOUs can we finally expect to be signed tomorrow?
Well, we'll have to wait and see how many MOUs we ultimately signed. There's a great deal of interest. And the idea for the India Investment Summit was really threefold. First, we obviously wanted to put our top policymakers, our top decision makers in front of some of the largest and most active pension funds, sovereign wealth funds. And we'll be doing that. We'll be going through in a very open and frank way, discussing all of the different things that we have underway right now as far as infrastructure is concerned. So that was one very important objective. The second very important objective, as you're pointing out, is to talk about NIIF, what we have accomplished so far, the kinds of funds that we will have under that fund of funds, and how it will operate, and the fact that it will be at arm's length from government, operated commercially, established in Mumbai. So we really want to be able to share all of that with our colleagues that are coming from overseas. So that was the second objective. The third objective, of course, is to see what might be possible because of a number of these players being there in terms of either partnerships for among the players or with the government, other things that we can do on a co-investment basis, viability gap funding that potentially can be established, whether we can do things as far as debt is concerned. All of those other issues we'd like to explore and see whether there are any innovative, out-of-the-box partnerships that might be possible.
You know, speaking of partnerships, one MOU has already been signed ahead of the summit kicking off tomorrow, and that's with Rosnano of Russia. But in terms of priorities, because you're looking at step-down funds, you know, we had spoken about the steel sector and perhaps how the NIIF may in fact play a role in trying to alleviate the pain as far as the steel sector is concerned. And there's a bunch of other infrastructure sectors that are in severe pain at this point in time. So if you talk about step-down funds, what could be the priorities there that you would like to tackle first up?
So there are three that I think are already in the pipeline and are moving along quite well. One, of course, is the MOU we signed yesterday with our friends in Russia, and that is looking at high-tech manufacturing and what we can do to further support Make in India. So that's clearly one fund that we'll be creating to be able to really get Make in India going and high-tech manufacturing going. The second fund that we have spent quite a bit of time thinking about already is the Stressed Assets Fund. You know, there's been a lot of discussion about NPAs and what we're doing about it. But one of the very important elements of dealing with the NPA situation is to have a source of long-term, stable equity risk capital that can get into some of these stalled projects and be able to provide the equity support that they need. So that's a second fund that we're looking at. A third fund that we're looking at is in the renewables area. Obviously, we have very ambitious targets that we have established for renewables for India's energy needs, and so that's a third area that we're looking to see whether we can get a fund started, an AIF started, operating within the NIIF fund of funds to really take forward investments in the renewables area.
You know, you talked about NPAs and stressed assets, and at this point in time, that continues to be the #1 concern, not just for the banking sector, but for the economy as a whole. The RBI governor said that perhaps it would create or ring alarm bells if we were to put out that data publicly, and perhaps the situation is worse than what we think it is, but it can be dealt with. In your assessment today, is the picture looking far worse on the NPA front?
I think the picture is very well in hand, Shereen. Obviously,
it may be well in hand. You may have the ability to be able to deal with it, but is it far worse than what you were expecting?
You've obviously seen the reports, as have I, on various numbers about the NPAs. The very important takeaway on this, and this is what I've been emphasizing, I think the governor has been emphasizing this as well, that as of now there's about 8 lakh crores of stressed assets in the system. And the very important takeaway in this is that that number has stabilized. So we know roughly...
But there's actually been a reversal if you go by the RBI's commentary yesterday.
No. I think we are very much on the same page with the RBI. Since Indradhanush, which was 7-8 months ago, we have been working very closely with RBI and the banks through their asset quality review, through the stress tests that they have done. We know what the stock of stressed assets is. As I said, it's about 8 lakh crores. And obviously, we now have to put in place two sort of parallel processes. One process which is already underway, and Governor has discussed that, is the provisioning that needs to happen as far as the banks are concerned, so that they strengthen their balance sheets. In parallel, the other process that's underway is the workout process. And in the workout process, we look at the stock of stressed assets and we see what are the best recovery measures, the best workout measures to ensure that these projects are viable, that these projects are in strong hands, that they have ample both equity and debt support, and that we can take them forward. So it's a parallel process that is underway right now. Through all of this, as far as the banks are concerned, we are providing the support to the banks as far as capital is concerned, and as well as mechanisms are concerned. We've been working with RBI to strengthen the GLF process, the CDR process, the SDR process. Obviously, longer term, there's the bankruptcy code that's coming in. But as far as the workout process is concerned, we have equipped the banks with the tools to be able to go through the workouts. The results are in front of you. We know that the stock of stressed assets is 8 lakh crores. We have an understanding of how much capital is required to be able to do sufficient provisioning and stay within the Basel III requirements. That's well within the Indradhanush requirements that we had laid out of 70,000 crore support from the government, 1.8 lakh crores in total. And with that capital at hand, the bank's provisioning, the workout process underway, as I said, we have, I think, a very clear picture on how to handle this.
But can we still expect any special package? There's been a lot of talk about, for instance, more measures to address the pain that the steel sector is facing. We haven't seen the government move, for instance, on the minimum support price as far as steel is concerned. What can we expect as far as any of these specific sectors is concerned?
Well, when we look at a particular sector, we have to first consider what is required across the industry and then what is required for individual situations. Now, the individual situations are all specific. They all have different sort of capital structures. They all have to be dealt with very differently. So let's set those aside. But it is true that there are many sectors, and many in which we've already taken action, where we require industry-wide measures. We've done that in textiles, we've done that in sugar, we've taken action in steel already. There may be more industry-wide measures that are undertaken as far as steel is concerned. But we very thoroughly understand what is required at the industry level for everybody in the industry, and then what is required at the workout level for individual situations. Both of those are underway right now.
Okay, just going back to the policy, and yesterday the governor has said that the RBI continues to be in an accommodative monetary policy stance, but a lot will depend on what the government decides to do. So he's in a sense sent the ball back in your court. Room for a rate cut post the budget?
Well, the governor knows that I'm a very good tennis player. So, and
so
you know as well, Shereen.
back in his squad.
When the ball comes to my forehand, I know where to place it.
Okay, so let me end by asking you, there's been buzz about at least 4 or 5 different MOUs being inked tomorrow. Can we expect, at least as far as the TIMSECs of the world, the GICs of the world, to actually sort of put some skin in this game as far as the NIIF is concerned?
No, we are quite hopeful. We will have the discussions with all of our valued partners. Each of them has slightly different appetite. Some would like to come in at the fund of funds level. Some are interested in specific funds. Some would like co-investment rights. So we are going through those discussions with all of them, and hopefully we'll have a very good set of outcomes as far as the summit is
CEO for the
concerned.
NIIF, by when are you going to make that decision?
Shereen, we've received fantastic applications for that. We have got more than 75 very, very qualified candidates from around the world. This position was advertised around the world, and as a result of that, the pool of candidates is very strong. It is going to be an arm's length institution that's set up and operates on a commercial basis. We need to be able to do that to attract all these LPs. The whole process is underway. We will prepare a short list and have a decision soon.
By the end of this month?
Certainly, we will have a name selected by the next couple of weeks. Let's see when we can make the announcement. That depends on the individual and so on.
Okay, and final operationalization of the NII?
We have said all along that our goal is to be able to get it launched and up and running by April 1, 2016. We wanted to make sure that we had enough traction with respect to LPs by the end of the year. We got that because of the great deal of interest that we saw. But having it operational by April 1 has always been a goal, and we are very much on track.
And a quick final question, the policy on strategic stake sales, I understand that we could expect that ahead of the budget. Is that what you're working towards as well?
You have already heard, Shereen, and you and I discussed this, that as far as IDBI, for instance, is concerned, we're going through a transformation process. So clearly, when we said in the budget that we would do strategic disinvestment, we have taken that step as far as IDBI is concerned, and stay tuned.
All right, Mr. Sinha, appreciate you joining us. Thanks very much for your time. So the India Investment Summit kicks off tomorrow in the capital, and you got a curtain raiser here from the Minister of State for Finance. For now, it's back to you guys.
All right, Shereen, thanks so much for that exclusive. So that's a very confident-sounding Minister of State for Finance talking about all the foreign investors that are likely to participate in that high-profile India Investment Summit. With that, it's a wrap on this edition of CNBC TV 18 Market Report. Thank you for watching. Stay tuned. Lots more coming up.